Hello everyone, welcome to the Ichimoku daily analysis for gold for Friday, September the 24th, 2010. Well, a continuation of the trend to the upside, and we have a candle with another green body, a fairly small green body, consistent with the green bodies close to it. The size of those green bodies doesn't seem to be getting any larger nor any smaller. It tells us that the buyers have made net bullish progress, but the amount that they've made is equivalent to the previous 3 days. So all is not looking bearish. It's still bullish, but what we'd like to see is the trend continues on its way as those bodies getting slightly larger. So really not too much to raise doubt about. The one thing that does raise a little bit of doubt is the spinning top type candle. A little bit of indecision in the market. And that's because of the relatively small body with the shadows on either end. And the shadow on the bottom represents buyers coming in, which is what you like to see in an uptrend. But in an uptrend, you don't like to see the sellers coming in, as evidenced by the shadow on the top. Now, that high of the shadow actually is at the 1300 area. And that's a round number. It's a natural area of resistance for this market. And over the next trading day will be an important psychological level for this market. So because of that, and because we have a spinning top type candle, there is some potential for this market to sell off. So we do need to watch the low of the current candle for a potential retracement down to around the area around this candle here, where we saw some minor buying coming in, and the market took off the next day, which coincides with the Tenkan-sen around 1272, and then down below there the 1260 area where we found previous resistance, and at the Kijun-sen around 1255. The market is trading up above the cloud or the Kumo, so we do have an overall positive bias, and trading up above both the Kijun-sen and Tenkan-sen, which means that we have a bullish bias in the medium-term and fast-term time frames. The market is still looking a little bit overextended. It's trading a long way up above the cloud, so markets can't continue like that forever. They need to relax and revert back to the mean, and there is a possibility that we may get some sort of a retracement, but we don't have any evidence of that at the moment. We would need evidence, and that evidence would be a candle with a lower high and a lower low. So over the next trading day, we do need to watch the low of the current candle, which is at 1289, and certainly the high around this important resistance area around 1300. If that's taken out in a bullish way, then the market will continue rallying, obviously.